If you don't want your face to be recorded, it's time to go ahead and like take your take your camera off. But we're gonna start in a minute.
Let's go like this. Okay. See, I don't like that. I don't like what that just did. Okay. Okay. So we're going to keep it as though I'm not formally presenting, and hopefully everyone's okay with that, just because if I make it my full screen, I can't see everyone in the room, which means I won't be able to see if somebody raises their hand or anything like that. So we're going to roll with it. Okay, let's go ahead and get started here. So tonight we're going to be talking about taxes, planning for them, making the most of money that you get back, and what to do when you owe. If you don't know me, my name is Mills Bender, and with me tonight is Stephanie Medina. We are both financial coaches with Mills Knows Bills, but we'll get into that in just a moment. Tonight, we're going to be going over who Stephanie and I are, give you a little bit of background on MKB, the company that we're with, how to budget for taxes, the best way to set aside your money, how to avoid a tax payment plan, how to make money on your tax savings, what to do when you get money back, and then, of course, we're going to give you some next steps to take after today. As I said earlier, my name is Mills Bender. I am the founder and CEO of Mills Knows Bills, where we help those with a variable income master their money in 90 days. So my personal journey started about 8.5 years ago when I found myself with $1.50 in my bank account. And ever since then, it has been my mission to not only master my money for myself, but to help other people master it as well. And as I said, we have the glorious Stephanie Medina on tonight as well. So Stephanie, would you like to introduce yourself?
Of course. So I am Stephanie Medina, the financial coach at the Mills Knows Bills team. And I also work very happily with variable income earners, as Mills just stated. My journey really began about 4 years ago when I had first graduated from UCF. Go Knights!
Goddamn.
And that's right. And I had realized that I didn't know what I was going to do with all of my student loans. I didn't understand how I was going to pay off this debt. I had very little financial education, and I took it upon myself, even while I was an undergrad, to see if I could learn little bits and bobs over there. But I never felt satisfied with that, right? So I kind of kicked it up a notch, and I really dedicated myself to learning how to go ahead and pay down my debts and understanding the foundations of financial literacy.
Mhm.
And I started sharing that with basically anyone who had ears. And that's how I found Mills. And I mean, the rest is history, as they say.
Absolutely. And you know what? It's been a wild past few years, but it's been a great few years. So before we get into the fun stuff, or I should say not so fun stuff of taxes tonight, I just want to give y'all a quick disclaimer. Stephanie and I and the rest of the MKB team, we're not tax strategists. We're not accountants, we're not CPAs. Our point and goal for tonight is to educate you on how taxes work and how you can properly budget for them so you can avoid some of the negative repercussions that come with not having money set aside for taxes. So our standpoint is very much a practical one. We give you basic rules of thumb, but then we also make it a point, if you need, to introduce you to a CPA or tax strategist to help you with those next steps. So with that said, Stephanie.
We want to hear your input. You've heard a little bit about us, you've heard a little bit about our background. You don't have to get too personal, but what are your thoughts about taxes? Necessary evil? The best thing since sliced bread? Somewhere in between? It really depends, right? Everybody has their own point of view, and it just depends on like your own story that you might have, how you grew up, how people talk about it in your life, your own socioeconomic background. What are your thoughts about taxes? We'd love to go ahead and hear some feedback in the group chat. And that's going to help us kind of answer some of your questions here at the end as well. But me personally, just to kind of give you a frame of reference from where I've been coming from, I grew up in a household where my parents were actually quite proud of paying taxes. I know that this kind of shocks people, right? They said they saw it as a privilege. They saw it as they had the mindset of saying, I've made enough. Now I can give back to my community. And that's just something that I feel comes really from our history of being from an island. My parents come from the Dominican Republic, where
Mhm.
social welfare is seen as a positive, right?
Mhm.
Now, as I've kind of come up here in the United States, I've learned that sometimes it's actually better to have money in my own pocket so that I can go ahead and determine where I want to go and put those funds. And the important thing is to be able to do that, you have to have a strategy and you have to have a little bit of education. One of the things that we say here at Mills Knows Bills is I don't know enough to become an expert, but I know enough to be dangerous, right? So,
Yes.
yeah, Mills,
We
go ahead and
love that saying.
yes, ma'am. Let's talk about some of the tax structures that might actually be important to you.
Absolutely. So before we continue the conversation, we need to kind of make sure that everyone has a general understanding of how taxes work. So we're going to have a couple slides on just some basic taxes 101. If you are someone who would like additional information on taxes, just follow up with us at the end of tonight's presentation. We'll make sure to get that over to you. Because we talk with a lot of variable income earners, most of which are business owners, they often ask us, well, how do I file my taxes in terms of my business? And there are four main tax filings for your business. You could be a sole prop or single member LLC. You could file as an S Corp, which is really popular and talked about often. You could also file as a partnership or a C Corp. So to give you a little bit of some understanding between the sole prop and S Corp, because those are the two main ones that we talk about a lot, you need to understand how taxes work as a W-2 earner, okay? So if you have a W-2, you have up to 4 different types of taxes that get withheld from your paycheck. Federal income taxes, which everyone pays, state income taxes, which all except 7 states in the US pay, local income taxes, and FICA. Local income taxes are really for those cities or municipalities that need to have an additional tax to cover whatever their cost of living is in that area. 2 of the trifectas, as I call them, that have all 4 of those types are New York, and San Francisco. Right? They have city, state, federal, and FICA. Just as everyone pays federal, everyone pays FICA as well. That's your Social Security and Medicare tax that you pay. Both of those are meant to go towards your future use of Social Security and Medicare. We're not going to get into the politics tonight of whether or not that money is going to be around for you or not. But the idea here is now that you understand federal, state, local, and FICA, let's talk about how they work in comparison from sole prop versus S Corp. So when you're a sole proprietor, you are both the employer and the employee. And when you pay yourself or you have your profit at the end of the year when you're filing your taxes, depending on where you live, you could have minimum 2 federal and FICA, but up to all 4 of those types of tax filings. Okay. Now, FICA is one of those taxes that is paid by your employer. So if you're a W-2 earner, the total amount that gets paid on your behalf each time you get paid is 15.3%. So if you have a W-2 income, 7.65%, half of that is covered by you and the other half is paid by your employer. But as we just mentioned, if you're a sole proprietor, you are both the employer and the employee. So you pay both pieces of that FICA. You pay the full 15.3% on that profit. Okay. Now, when you file as an S Corp, you have the ability to limit this amount of tax. The idea behind an S Corp is that the business itself has its own filing, it's its own entity, and then you as the business owner can get paid from this entity as in two different ways. You can give yourself a W-2 paycheck, and you can also take what's called a K-1 distribution. One is earned income, the W-2 is earned, and the other is passive income, meaning it's just the value of the business going up. You just collect some of that growth. When you file as an S corp, the amount that you W-2 has up to all four of these pieces, including the full 15.3% FICA. Because again, both the employer and the employee. But the amount that you take as a distribution avoids FICA altogether. That's why FICA is often called self-employment tax. A lot of business owners don't realize that they're paying the full 15.3%. So once you get to a certain threshold in your profitability in your business, it might make sense to say, rather than taking the 60K of profit and being a sole proprietor, maybe I take 30K and I give myself a W-2, and I take the other 30K and avoid that additional 15.3%. Again, we're not going to go into the nitty-gritty details of all of these taxes today, but now that you understand how these taxes work, we can start learning the rules to the game. And once you learn the rules to the game, you can learn the loopholes as well. So with that said, how do we even figure out how much we should be paying in taxes? How do we figure out the next steps? And that's where Stephanie's going to take over.
Yeah, that is a great question. So that's pretty much where everyone kind of starts, right? What do I do with this, or how do I even get started? And as the slide pretty much says, it starts with practical budgeting. And I know it sounds sexy. We all love it. I know it's glamorous. It's giving us Fergalicious. And at the same time, we know that it's also setting us up for success, right? A little bit of sarcasm there, because we all know that practical budgeting doesn't sound fun. It oftentimes kind of has this connotation of, oh my gosh, I'm doing what I have to do. It's not something that I want to do. However, keeping in mind something that I say often to people, a budget is a monetary reflection of your priorities, right? So if this is something that's important to you, if this is something that you want in your life, or you want more of something in your life, it can be built into your budget. And with that being said, taxes, we're going to have to pay them regardless, right? So might as well come up with a strategy that just makes your life easier, right? Some of the things that are necessary in terms of practical budgeting, you can go to the next slide, are going to be determining what your mandatories are, what your extras will be, and then automating that, right? So one of the first things in regards to like mandatories is pretty much what it sounds like. What do you need to live? What are the basis of your living expenses, right? So we're talking rent, we're thinking groceries, what paying your car, or paying for gas. Some of the items that actually are necessary for you to go ahead and go about your day-to-day life. We're also thinking about our debt expenses, because they're not going to go away either, right? So if we've got a credit card, understanding what we're paying off from that. If we've got a mortgage, what does our mortgage look like? Not all debt is bad, right? So it's not like we're going to start expediting our mortgage payments, but we've built it in to the foundation of our mandatories. So we know exactly what we have to spend in the case of basically losing our job or any emergencies coming up, right? These are the very core items. When it comes to some extras or anything else that might be part of like your budget, that's important to have in there as well, because we mentioned that budget is going to reflect your priorities, right? If it's important to you to have certain items in your budget, you're going to want to go ahead and include that on there so that you're not living life in the trenches. We don't want that either, right? So it gives us an idea of what our base goal is going to be in regards to our finances, right? So if we know what we need as a foundation for our budget, we can go ahead and start building up from there. and having an understanding of what's absolutely necessary for our day-to-day life. And as I mentioned before, we don't want to go ahead and just live kind of like bare bones, right? We don't want to just make it through the day. My goodness, it's Tuesday, but it feels like Thursday, right? We also want to go ahead and factor in some of those things that make life worth living, right? If it's a priority for you to go ahead and spend time with your loved ones, if it's important for you to go ahead and have a nice dinner, or to go ahead and make sure that you have a little bit of time to go shopping for yourself, or put money aside for investments, or you just want to go ahead and keep it all in there like Mr. Scrooge because that makes you happy. I am not judging. This is your budget. At the end of the day, you want to have a little bit of extra wiggle room. And this is where your extras are going to come in, right? So a budget, when it comes down to it, you don't want to go ahead and make it extremely tight, kind of like the analogy of the belt loop. I know that if anyone's heard Mills talk, it's kind of like going to the store, putting on a pair of pants and realizing, hey, they don't fit me exactly right. If you put on that belt and it's a little too tight, it's going to be uncomfortable. You're not going to want to wear it. But if it's too loose, then what's the point, right? This is giving you that wiggle room to really enjoy your budget and enjoy your life, right? The next items that we've got are our stretch goals, right? So maybe we understand what our base goals are. We understand what's important to us to have in our lives to kind of have that spark of joy in our extras and to plan ahead. And then perhaps maybe we want to go on one or two more vacations. Maybe we actually want to go ahead and purchase a home, or we're planning on starting a business. This is where our stretch goals come in. And that's understanding where your money is going to be going and having a plan for that. So, kind of tying it all together, if you understand that this is how I want to live my life, this is a picture of what my priorities are, and this is the money that's going to back up that dream, you have to go ahead and make sure that you have enough money for all of those items, right? It's kind of the no-brainer. Right? We don't want to be going around not being able to afford the life that we want to live. But that being said, we have to plan for taxes with that as well, right? So always factoring in as a little bit extra, where you can go ahead and say, hey, I'm going to go ahead and actually put aside a little bit of money, or I'm going to have a plan as to how I am going to pay towards taxes in the case that maybe it's not being withheld for me, or maybe I have a side hustle that I want to go ahead and start. Incorporating that into your budget is just going to make your life easier, so that eventually it could be out of sight, out of mind. Some of the ways that we can go ahead and make that happen, we can go to the next slide here for me, is by automating the process, right? So if I know that essentially I'm planning on, doing something with my business, or I've gotten new clients and I've got money coming in, I'm not going to take all that money and run. I would love to, but I'm not going to, right? But I'm actually going to go ahead and make a plan, right? A portion of that is going to be put towards that budget that I've created, where I've thought of my base goals, my little bit extras, and some of the future stretch goals that I might have. And then a portion of that is going to go ahead and go towards my taxes. And that money can be automated. That process can be automated. Right? So whether you go ahead and put that money in a high yield savings account, which is actually what I personally do, I just go ahead and whatever I've earned, I go ahead and put a portion of that and set it aside for the taxes. It's not money that I own anymore. It's not mine. I can't touch it. I don't even see it. I go ahead and put it in a high yield savings account, or I go ahead and put it in you could put it in a separate bank account, and you could determine what that amount is each month or each time you get a distribution, right? So some of the ways that you can do that is by cash envelopes or direct deposit, as it states here, or doing an automatic account transfer, so that truthfully it is out of sight, out of mind, and you go ahead and pay that to the IRS promptly. I always tell everybody they are the OG gangsters. So you definitely don't want to mess with them, right? Unless you want Al Capone at your door kind of situation. They will send you a lot of letters. All right. So when you go ahead and put that money aside, it saves that headache for you. And if you do it automatically, all of a sudden you're going to realize I didn't even think about having that money in the first place. I don't even need it because I've already set up my budget so that I can factor in all of the things that I want in my life already without having that money.
Absolutely. So really, let's tie it all together before we talk about the benefits of setting the money aside as well. So if you are a W-2 earner, if you notice that you don't have enough taxes being withheld, but you don't want to increase how much is being withheld, you can set aside the difference based off of what your budget states, right? And if you're 1099 versus maybe somebody who has a business, you can estimate, I would say about 25 to 30% of your revenue should be set aside for taxes. And just as Stephanie said, you set it aside and you treat it as it's not your money because it really isn't your money. You just don't have it being taken out right away like most fixed income W-2 earners do. So set it aside. And as Stephanie said, let that money work for you on your behalf because then it's at least doing something for you while it's not technically in your pocket. The reason why we say 25 to 30% of your revenue should be set aside is because ideally that should be a pretty high dollar amount. And we'll talk about that actually right now. So the benefits of automating this money being set aside, putting it in a separate bank account, getting a higher interest on it in something like Ally Financial, Relay Financial, Morgan Stanley's high yield savings account, whatever your whatever your choice is that it's doing something for you more than it would in a typical savings account of 0.01%. At least your money is maintaining inflation rather than losing purchasing power. That 25 to 30% that you set aside is typically should be more than you owe to the IRS, which allows you to either at the end of the year, if you're a business owner or 1099, before you file your taxes, you talk with a tax strategist and say, how much of this can I reinvest into my business and use as a tax write-off and lower my taxes even more? And or you still have money left over that you get to give yourself an extra little payday. It's a lot better to be conservative and have extra wiggle room than it is to be without, because it gives you options. And the more money you have over there, the more it earns you interest. Now, Stephanie and I are not saying you should invest this money in the stock market or real estate or anything like that. If it's meant for taxes, it should be liquid. It should be in a bank account that's easily accessible. But a bank account does not mean 0%. Okay. If you're in the amazing position where you're getting money back, there are 4 things you can do with that money. Now, before we go over those 4 things, I want to say one thing and make it abundantly clear. If you owe the IRS money and you cannot pay them in full and you go on an IRS tax payment plan, you pay them interest. If the IRS owes you money and you get a tax refund, you are not getting any interest. You want to pay the IRS just enough to be penalty free, but not so much that you're getting thousands upon thousands of dollars back. Sometimes it's unavoidable, okay? But that is why it's important to talk with a CPA and tax strategist throughout the year while you are saving. You are in control of your own savings, so do something with it and let them guide you as to the best methods to implement it. Now, regardless of how much money you get back, there are 4 things you can do. You can pay off high interest debt. Rule of thumb, anything greater than 10% should immediately get paid. If it's costing you more than 10%, pay it off. The next thing you can do is build your emergency fund. That's 3 to 9 months worth of those mandatory expenses that Stephanie was talking about earlier tonight. You've taken the time to calculate how much your base goal should be in terms of revenue, multiply that number by 3 to 9, depending on how many months you want set aside, and that's your emergency fund goal. The third thing you can do is put that money to work. You can invest it. Real estate, stock market, doesn't matter. And the last thing you can do is treat yourself. Get boba. I know Chloe loves boba. We were talking about that last week.
Books.
Stephanie likes getting her hair blown out. I like getting massages. Whatever it is for you, treat yourself. Now, there's a very, very strong common misconception in our day and age that treating yourself means that you take the entire amount and give yourself a break. Take a portion of it. Okay? And just because these are 4 different things you can do doesn't mean it's an either or for any of them. Find a balance between all 4 components if you have all 4 components that need to be crossed off the list.
So, is this you? Are you going through this right now? I know that currently tax season kind of ended, wrapped up for some people. So during this time, did you feel like you didn't have any time to manage your finances? Did you feel like you were struggling to ask someone for advice or know what to do with your money? Did you feel a little bit kind of lost in the process? Like, I don't know. So I might as well kind of bury my head in the sand. I know that sometimes there's definitely that feeling of no matter how hard I work or what I'm doing or how much I make, I'm never really going to have enough. And oftentimes it kind of feels like an endless cycle, right? So if you identify with any of those things, then we definitely have options for you. We for sure do. So this is actually something that we pride ourselves in. This is something we have a community for. So if you ever have questions, always feel free to go ahead and ask us how we'd be able to go ahead and help. Now, with that being said, what if you could achieve your version of financial freedom within 90 days? Imagine. It took me personally about 5 years. It took Mills over 3 years in her own journey to kind of get to the point where she's like, maybe I got this. It could take you 90 days.
And that includes understanding taxes even more than what we've talked about this evening.
Yeah. The way that you could save time, the way that you can go and set yourself up for the future and create that budget and that life and focus on the priorities. Everything that we've just been discussing in this webinar is something that we'd go over at Mills Knows Bills for the Master Your Money program. It's one-on-one coaching, and it's something that we definitely pride ourselves in being able to go ahead and take your problems, take your concerns, hold your hand throughout it, and come up with a solution together.
Absolutely. So we go over things like money mindset. This is your opportunity to see how you might be getting in your own way in terms of your perceptions of money. What was your upbringing looking like that is keeping you from reaching your financial goals today? We talk about your personal budget, those mandatories and extras in even more detail, including things like your financial independence number, how much you need for retirement. If you have a business or if you're in sales, we tie that into a business budget. We associate that revenue amount with a sales goal and the best way to spend your time so you're working smarter, not harder. For my business owners out there, a lot of times they are struggling to reach their revenue goals because they have a disparity between their time budget and their money budget. Meaning, in order to hit their financial goals, they would have to bring on a number of clients that they just don't have time for. So you need to charge what you're worth. We talk about how to eliminate your debt twice as fast, how to automate your finances through a plethora of different systems and processes. As we mentioned earlier, we take an even deeper dive into income taxes, but we also go over things like investing, how to invest, how to start, where to start, how much, when, and so much more. As Stephanie mentioned, we do have the advanced package, which is for one-on-one coaching, but we understand that, there are budgets of all shapes and sizes here tonight. So we have a basic package and the advanced package. The basic package includes a 12-module core framework. And that goes over all of those topics I just mentioned on the previous slide. It also gets you access to the Master Your Money community, which is an exclusive Facebook group. And you get access to all of the Mills Knows Bills tools and resources we've ever created. If you were to piecemeal all of those components together, that would be valued at just over $9,200. But we sell it for $997 or a various payment plan for $187 a month is our lowest. The advanced package includes everything the basic package does, but we include those 6 bi-weekly one-on-one coaching sessions. That's your opportunity to really have the program tailored to you, your business, and we sell this at a higher price point because we do pour ourselves into our clients' finances just as much as they do. In fact, we do a lot of work on the back end. By the end of each program, if you dedicate yourself for 90 days, you can double either investment. We've seen it. We've seen it every single time. Now, although we sell these for $997 and $54.97 respectively, if you're in a situation where you are getting money back, and we talked about investing in yourself, what better way to invest in yourself than to take advantage?
So we do have a special offer for a limited time, 15% off. Listen, if Mills had offered me this back in the days, I would have taken it and ran. I actually just kind of share. I went personally through the Master Your Money program, and within that time frame, I was actually able to go ahead and create a 6-month emergency fund, which promptly actually helped me out because I had a bunch of emergencies around that time. But eventually, I was also able to go and build up that fund and purchase a car outright cash, right? So as Mills was saying before, it pays for itself. That's been my own experience. In order for you to go ahead and claim the 15% off, go ahead and use our coupon code when you go ahead and check out. I mean, that's kind of how we feel about taxes, but it's not how you have to feel about your finances, right? At the end
Absolutely.
of the day. All right.
Absolutely. We just want to help y'all. Okay. The coupon is valid until Thursday. So you have the opportunity to make the decision however you see fit. You can share the coupon code with a family member, a friend, enemy. I don't really care. The point here is that this is the time where we are often getting money back, and we're also in a really serious moment in our economy. We need to be smart about how we are spending, saving, and investing our money. And if you are unsure how to manage your finances, now is the time to invest in your financial literacy. No one else can do that for you. And I say this all the time. That has been my biggest financial regret, which was not starting sooner and not asking for help. So whether you want to take advantage of the coupon code or if you just want to ask us some questions, follow us on Instagram at Mills Knows Bills and Save with Stephanie. You can follow our YouTube channel as well, which is also Mills Knows Bills. And if you're in a situation where, you're not sure which package would be better for you, basic or advanced, you can schedule a call with any one of us on the team. Calendly.com/Mills Knows Bills. We are more than happy to answer any questions that you have. Now, let's go ahead and just open the room for questions. And I will stop the recording before you start asking.